All right, good morning. It is Monday, May 12th, and woke up at 6:30 today, and I have been waiting to see what was going to happen in the stock market. All right, we're going to talk about bears versus bulls, and what the heck does that even mean, and how do I apply it? All right, so first of all, the market runs on emotion. It runs on sentiment. It runs on what's in the news, whether it's true or not. It runs on fear. It runs on greed. It runs on uncertainty and doubt. Kind of crazy stuff. What does that mean for you? Well, let's take a real life example. Today, the news, even before the market, talked about how trade relations and tariffs were working out, how deals were positive looking between the Trump administration and China. Now, when I talk about politics, when I talk about this, I am not endorsing any candidate. The stock market doesn't endorse candidates, but whoever the president is in any administration, how their actions are perceived by the world determines stock market prices. I know it's crazy. So the news looked good. Companies felt confident in moving forward, and investors felt confident keeping their money in the stock market. It went up. It went up significantly. I think my portfolio bumped up 20% in the market value. Now remember, we talked about unrealized versus realized gains. Just because the market value of my portfolio may have gone up 20% before the market even opened, that doesn't mean I made 20%. It just means that that's the value now. I don't realize that value. That value doesn't become real unless I sold the whole darn thing, and then I could pocket the money, and then it would be real. But that's not what we're talking about here. We're talking about investing in things that give you a cash flow, and you're not going to sell your cash flow cow. You're not going to kill the goose that laid the golden eggs. You're going to let it ride. So this big bump up looks like we are going into a bull market. And a bull market, think of a bull in a china shop just charging forward. We are charging forward. We are charging upward. The stock market will always go up and down, but it's going up as it goes up and down. Now, when the stock market goes lower and lower, even though it's going up and down, it's dropping lower. Typically, that is a bear market. So think of a grizzly bear. People are afraid of grizzly bears. When people are afraid, or there's fear, uncertainty, doubt, confusion, they sell. And you'll see that in the stock market with things selling off. Now, what does that mean for you and me? I don't know about you, but I love a good sale, and things are on sale when that happens. So if you bought back when I said, dang, things are dropping, we're in a bear market, here's the time to pick up some stocks on sale. If you did that, you absolutely noticed in your portfolio that, dang, looks like I have more money now. So that's the difference between a bull market and a bear market. How does it apply? There's a lot of factors. There's a lot of things based on your planning, your risk tolerance. How much money do you want to have in retirement? How soon do you want to get there? There's a whole lot of factors that determine how it's going to benefit you. And believe me, you can benefit in a bull market or in a bear market. You can benefit in both. Got to be clear on what you want, and I will help you find out how to do it. So this is, I don't know which mini class we're on now, but I hope you've watched all the mini classes There is a 12-week course that is coming up. Stay tuned for that. And happy investing. Ask your questions, and I will see you later.